The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 28th Turnaround Thursday. It's supposed to be Turnaround Tuesday, but Turnaround Thursday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone at any time. Dial on in, 877-927-6648. I could use a guest host or two. That would be a beautiful thing. Of course, internationally, you can guest host the show as well by calling in at 727-445-1044. I'm sure you've got something great to share. So let's hear from you on this terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading off 48 points. She's trading at 17,993. S&P is flat. NASDAQ Composite is up 2 points, trading at 48.65. Russell 2000 down 2 points. The DAX closed up 21. The FTSE closed up 2. Gold is trading up $17 at 12.67. Silver's up 27 cents at 17.56. Light sweet crude, that's trading up 50 cents at 45.83. Natural gas off 6 pennies, leading the charge here to the upside. Dollar-wise, you've got CoStar Group up 11%. That's up nearly $19. You've got St. Jude Medical. That's a buyout, I believe. That's up $17. You've got Intuitive Surgical up 10. Lancaster Colony Corp up 10. Amazon is up 9.50. You know, Amazon is out with numbers after the bell. So we'll go take a look at that, see if we can peg that like you and I pegged Facebook yesterday. Did we not? You've got Facebook. That's trading up $8 and change, trading out at 117. Let's take a quick peek here at Facebook. We can see that, you know, it gapped up. It's got big volume in it. It's taken out a swing point at this stage, the swing point from February 2nd. That's got 59 million shares. You're at 62 million shares today. You're back, though, below that level. That's the 113.20 area. Well, no, let me tell you, 117.59. You're 117.17 out here. But, of course, what was really key yesterday, let me turn off the market profiles because we really were not using those in trying to evaluate what was Facebook doing. So we'll turn those up. All that you and I were looking at was this high volume swing point from the trading session of April 13th. We saw that price pulled back into that area that had 88 million shares, formed a hammer candle at the end of the candle session yesterday. So that was a no, it wasn't a hammer because that body was just a tad too big. Nonetheless, you tested that swing point with 52 million shares versus 88, and they simply outperformed, and the market moved higher. Now, here's the problem inside of Facebook as we take a look at it. What Facebook also happened to do, even though it's got volume behind the move, remember, you and I, we take a look at our table. We take and analyze any kind of stock. We try to utilize at least 4 different legs. If we only used one thing, you don't want to do just one thing when you're taking a look at a stock chart out here, because then you've got a table with one leg. Of course, when that table, when that leg breaks, it's not going to stand out there. So we want to utilize multiple tools to help us identify what the market is doing. Well, one of those tools is when price moves higher, does with less relative strength out there, and that's what Facebook actually has done here thus far today. Now, do we have any kind of reversal signal? Absolutely, positively not. Is this pattern important? Well, look, the last time that we saw Facebook moving higher, doing it with less relative strength out here, took place on November 5th. It also had gapped up, created a little doji candle out here, and then price that actually marked a high down into a bottom that formed in January 20th to be specific, with the market out here. So, you'd like to have seen Facebook move higher, do it with more relative strength than the previous high out there, and that is not what it's done out here. So it'll be interesting to watch what Facebook does. Now, the key is going to be, hey, where's Facebook going to close? It's at all-time highs. If there was a gap down tomorrow, this could also go ahead and at highs create an island top reversal, which would be pretty bearish for the NQ, which is already pretty bearish out there. So that's what's going on inside Facebook. We'll take a look at Amazon and anything else that you'd like. You just have to type that in or send me an email, steve@tfnn.com. Give me a call, all those types of things. Now, the question is, hey, what the Sam heck is the market doing out here? I woke up this morning. I'm assuming that this is what you were saying. You woke up this morning. I don't know why, and I did wake up this morning, too. That's a good thing. We always like to wake up, right? And when we woke up, we saw futures were moving lower, and then they moved lower, and then they started moving higher, and now we've seen them sell off. And your question should be, Steve-O, why in the heck have they done that? Well, I'm actually glad that you asked that question. We don't often do this, but we often answer that question, but we don't often go look at a 10-minute chart out here. But it's a 10-minute chart pattern. You want to have multiple time frames that you're looking at, depending on what it is that you're trading out here. Now, we just looked at Facebook. We've looked at so many different symbols, indexes, ETFs, you name it, currency pairs, and have looked for this pattern that works on all time frames. All time frames out here. You got to stay within that time frame that you're trading, but take a look at when the high was made here yesterday. You can see that this is at $2,300. So what is that? That would be 11 o'clock at night. Of course, shortly after that was when the Bank of Japan came out and said they were going to sit tight. And in that currency, the Japanese yen, talk about a huge move out there. All these candles, whether it's a 10-minute chart, you're looking at the NQ, or whether it's a currency pair, I don't care what you're trading. Rule number one is you can only trade if you use stops. If you are a trader and you do not use stops, go do something else. Please, all that you and I can do is protect our capital. We never know what the market is going to do. But what we do know is that if we have stops in place, we live to see another day. We don't start to have to deal with the issues of should I stay in, should I get out? You're out, and then you become more objective. And that's what you need to do. You've got to become objective when you take a look at, you could always get back in on that trade out there. Well, take a look at price moving higher out here, right? Does it with less relative strength, moves lower into the 5 a.m. time frame, right? Moves lower. And you got to wait on these patterns until the cavalry arrives, right? If you don't know your candlestick charting out there and you're trying to make determinations based upon those candlesticks, and you've got to take a class. I've got classes that'll absolutely take you from 0 to 60. We'll link the known to the unknown. We'll go ahead and cut through all the BS before Steve information out there. You just send me an email, steve@tfnn.com. I think folks at TFNN will get you into the right course there. That will just it'll save you bundles. You'll make fewer. You'll make, when it comes to candlesticks, you won't make any mistakes out there. Now, what does price do? Price moves lower. Get a nice little bullish engulfing candle out here at 510. Then we start to see what? What do we start to see happen with these market profiles? They start to form at higher levels, higher bottoms, higher tops, right? Until when? Until price moves higher to 1150 with less relative strength. The same bottom, the same top before, the same top right now. Now we got price moving low. On a 10-minute chart, we got a little hammer that's forming. But this doesn't close for 6 more minutes. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 68, S&P's off a point, Composites down one as well, Russell's off a couple points. The close is going to be interesting today for sure. So, again, we were taking a look at just simply a 10-minute chart out here. 10-minute chart was showing us both tops and bottoms inside of the market. What we also can see out here, and this is so you don't have to be a rocket scientist to take a look at this and say, wow, well, you know, you would anticipate that on the bounce that we've seen thus far today, this morning, that price would stop where it did. Why? Look at that wide-ranging bar. Like, again, you know, you can totally focus on volume if you want, but we don't want to do that. We want to. This is where the market broke down last night at 11 o'clock. Wide-ranging bar. And that says there were plenty of people that were willing to sell at that stage. I don't care whether we're going to blame it on the Bank of Japan, whatever it is. Price came back up to a place where it had broke down. And while it was doing that, it was moving higher, doing it with less relative strength out there. So is it any wonder? Is it any Stevie wonder that it is moving lower right now? Now, the question is going to be, hey, what kind are we going to be in a consolidation? Are we going to break below the lows out there? And, you know, I don't know the answer to that. I will tell you that with regard to the NQ specifically, we talked about this yesterday. It's given us clear sell signal. It is the only indice as we speak right now. Well, let's actually, I haven't looked at the charts here for about an hour. So let's before I say that, I don't want to speak out of step out here because there we go. So the Dow. So the Dow is the second indice at this stage of the game to give us a signal that it too is now ready to turn. You may say, what the heck are you talking about? Well, if we go ahead and we take a look at the Dow right now, we're going to take a look at that bottom panel out here. You only got 30 stocks, right? But you got the advanced decline oscillator that is now back below zero. That was after spending 1 day above the zero line yesterday. And that says, that's what's referred to as a simple structure. If you were a McClellan oscillator aficionado out here, and that would say that it really, and because it was really in possession of the bulls out here, that they really did not have control of the market yesterday. That's what we're seeing. Now, this tool It matters what its reading is at 4 o'clock, and I don't know what that reading is going to be at 4 o'clock. But if this were 4 o'clock, if 1:20 p.m. were the new 4, we would say that the Dow is also now giving us a signal that the market has formed some type of top out there. The duration, you and I have covered this before. Well, we covered it yesterday. It is not going to be the top of all tops that many people are calling for out there. I don't care if we're going into sell in May, because we know that that's not really the true. It's a nice rhyme out there, but the reality is you'll get your something in a ringer out there if that was really how you were going to trade out there. You and I, we've taken a look at that New York Stock Exchange. We looked at this yesterday out here, and as we take a look at it, it's clear that the market is eventually going higher into the July timeframe. Maybe that's when we might see some kind of market top. But when we take a look at the New York Stock Exchange yesterday, take a look at that advanced decline line, even a higher closing high in the advanced decline line. Is that how the New York Stock Exchange makes tops? Has it ever made tops like that, significant tops? The answer is no. So why would it this time? It's not. It's giving you and I a clear message that we've got hopefully a nice retracement that is about to occur. And then what you'd want to be doing is looking to be able to buy that retracement. The volume oscillator inside the New York Stock Exchange yesterday also making a higher high. Don't pay attention to my figures and calculations out here on the right-hand side of the screen. That is not important. What is important is the line, the direction of the line. That's just mathematics on the side in order for me. Now, what the New York Stock Exchange is doing, no question about it, first time we've seen this in quite a while, but we haven't seen it since the bottom that it formed back here on September 29th. And back then on September 29th, you might have been thinking to yourself, this market is it's going to go bust through those August lows out there. Well, guess what? Guess what the pattern was that was out there? The same pattern that you and I just looked at, I called the tops and the bottoms most recently here in the 10-minute charts out there. And that was at the lows back in September inside the New York Stock Exchange. Now we've got the New York Stock Exchange moving higher, doing it with less relative strength out there. Does that mean that we've got a sell signal? No, we don't have a sell signal inside the New York Stock Exchange, unless you know something that I don't know out here, but we do not have one. Could we have one by the end of the day? Yeah, there is a possibility, slight possibility, but there is a possibility. Maybe it's tomorrow, maybe it is Monday. But if price continues to move higher, does it with less relative strength out there, and then the bearish cavalry arrives, well, then we will have our answer. But it's really at this stage here, the only real sell signals that we have inside of the market are inside of the NQ and the NDX 100, not the NASDAQ composite, not just yet. We're getting really close out here. And by really close, I mean, if we take a look at this, Stevie's got a nice little set of tools and indicators. Now, you got to admit, they're a nice set of tools. They're a groovy set of tools out here. And if you just simply take a look at that red and black, squiggly-ish type line on my charts, when you see the crossover of that to the upside, to the downside, in this case here, you and I were anticipating a crossover to the downside in the NASDAQ composite. And that probably will go ahead and get things really rolling to the downside. It's just about to kiss and tell out here. Those two lines are coming together nicely. Yeah, bad close today, and maybe we get the kiss. Maybe we even get the crossover out there. But we already have that inside the NDX 100. What does that say? That says that the NDX 100 is absolutely turned. Now, can it turn back around? Yeah, of course it can. Yeah, anything can happen. But what you and I know as we speak right now, 1:24 p.m., is that the NDX 100, the NQ, have given us absolute, convincing, no questions about it, sell signals out there. And now it's just a matter of, hey, who's going to be next? It looks like who's going to be next is going to be the Dow. But you and I talked about this yesterday. It could be the Russell 2000. Where the heck did I put that chart? Come on, I didn't get rid of that chart, did I? Did I get rid of that chart? I don't think I got rid of that chart. No, I don't. Well, if I did get rid of that chart, I'll put this chart up here. If we take a look at, and why could it be my anticipation is it would be the Russell that would give us that signal. But that was because yesterday, it got to that seventh inning stretch out there. Price has been moving higher, and it's not been moving higher with less relative strength out there. Maybe not so bad. Maybe another signal as to why the markets will eventually move higher after this retracement that occurs out here. But at this stage of the game, is there a signal out here inside the Russell? No. So it probably is the Dow that gives us the next toppling effect, and then from there, we'll see. But it is in that wonderful seventh inning stretch out here, so we'll pay attention to it. A lot of questions about the light sweet crude out here, and there should be questions about it. Saying how can this market turn if light sweet crude is going to continue moving higher out here? And that's a good question to pose. If we take a look at that correlation chart out here, we'll see that light sweet crude was unaffected by the Bank of Japan move last night. When I say unaffected, I mean no effect whatsoever out here in the case of light sweet crude. It has motored on to new highs out here. Recent highs is really what I should say. And there's no end in sight as we speak. This is a 30-minute chart that you and I are taking a look at out here. If you and I go look at a daily chart, we're going to have to go look at A to B equals CD patterns, because price is above every kind of market profile that we can imagine out here. And, it's heading towards its next swing point. That's at $47. Maybe it's headed to $52. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 64. S&P is flat. NASDAQ Composite's up a couple of points out here. So let's go take a look at let's look at the currency pair. Let's go take a look. You and I looked at the Japanese yen last week,
And one of the things that we noted out here, well, first we had that wide-ranging bar, right? This was a total buy the rumor, sell the news deal out here. Let me turn off these profiles. And we had a advanced warning that said we had to be careful here with regard to the yen. And that was, see that wide-ranging bar right here, April 22nd? Get rid of that line. I don't know what that was out there for. One of the things, oops, give me a moment here. Give me a moment. One of the things out here was this candle session right here. Here was the last time we saw a real nice move. I don't know what happened on January 29th with regard to whatever the Bank of Japan might have done, but a nice move, wide-ranging bar to the upside. And markets don't end on wide-ranging bars. This one, of course, did. It moved sideways the next day, then started moving lower out here. And we said, because of this formation, you probably have to be careful, because we knew that this was a rumor day out here on April 22nd. And sure enough, we can see that what it did was it just simply moved sideways. It's very similar, 2 extra days than back here in the early part of February. And now you've got a wide-ranging bar to the downside. Now, that wide-ranging bar to the downside, that's a real one that we can hang our hats on at this stage of the game, which would say what? That would say that prices should head lower. Now, let's look at a weekly chart out here, unless you get the same reverse pattern out here, but I don't think so. And so if we take a look at that, that would say that we ought to see the Japanese yen, pull back into the 105-ish, 101 type range. I mean, that's a pretty good range out there from high to low. But there's really where your next set of support is inside of the yen. Call it 102.50, somewhere right around there. You're 108. That would be one heck of a move to the downside. Little hammer candle out here. So we would go ahead and target that from October 13th. Again, it's a weekly chart, and that gives us that 105 area, and that should become the target here for the Japanese yen. Big, huge movements out there. Let's look at, so we talked about Amazon, or mentioned Amazon. I'm sure I'm not the first out here, but Amazon is out with numbers after the bell. Let's go see if it's giving us any clues. I think we started taking a look at this yesterday. Yeah, we must have, because there's a line on the chart out here. And one of the things that you and I noticed was that Amazon was pulling back. It was pulling right back into its rising trend line out here. Now, that's a trend line coming off of the February 9th low, right? That's your first touch point. Touch point number 2 is going to be the low from March 21st. So at this stage of the game, price came back to a trend line, tested it, in essence, rejected it, and has since moved higher. We also know that there's some pretty significant resistance at the 657 level. So 614, 657. Well, there's resistance at 657. There's also resistance just above that area, which is at the bottom of the gap down. We use the yellow line out here now on my charts at 675. So there is your real strong resistance zone, which is really out near the highs out here. And let's look at market profiles. Are there any clues out here? The clues are that it's trading right now just slightly. It's right on the daily market profile bottom out here, which is priced out at 615.16. And I'll be a son of a gun. What are you trading at right now? You're trading at 614.17. So you're off by a $1 out here. But here's what we know. Is this giving us a clear signal just like Facebook did yesterday? I'd say the answer is no, because we don't have any tests out here of swings or breakout areas or breakdown areas. We just don't. We know that the trend is still rising, so that's good, but it doesn't tell us how the market is going to respond to the news out here, to their earnings report. So here's what we do know, depending on whether or not you're in Amazon. I would say this is that if Amazon responds positively, it ought to trade up to the 652 level. I would think that would be the first area where it would stop. That's 652, 658, and 675. That, if it can break above that, that would be very strong out there. However, if it breaks the trend line, starts traveling below it, and I'm not saying that it'll do this, and it won't do this, probably won't do this in one day. It could do it, but probably won't do it in one day. It would trade down to 518.49. But they control the world out here, don't they? Most of the world. So, but anyway, and where I'm going with that is just simply the weekly TAS profiles out here. So 496 to 518, but it's got to break that trend line at this stage here. I don't have any more of a clue. Yesterday it moved back with 4 million shares. Today it's bouncing with about 3 million shares, a little higher. So that's pretty decent volume out there. I don't have a clear, equivocal. I can give you the ranges, but I don't have as clear a vision as you and I had when we took a look at Facebook yesterday. Let's look at some other things that are moving. Let's look at what is this CoStar Group, up 10%, $17. So it looks like they were out with numbers. CSGP is a ticker symbol. This is moving higher with good volume today, 323,000. Not your most liquid of stocks, but it is a $200 stock out here, so not too shabby. Let's see if we can figure out where this is headed to. And the answer should be it's above all profiles. There is no reason why CoStar Group, and it's pulled away from a B point of an A to B equals CD with volume. That was the trading day of March 23rd or so. Was it the 22nd? Had 190,000 shares, 234,000 on March 31st. So it's up above. That's an A to B equals CD to the upside. That's been confirmed. That A point all the way down here in the trading day of February 9th. We'll use our B point out here on March 23rd. Your C point, that little retracement into April 12th, about a 0.382 retracement. And it says 219 is written all over it. I would have to say it gets all the way back up to its most recent highs from July 21st, which is somewhere in the 223 to 231 range is where it really ought to target. That is CoStar Group, CSGP is the ticker symbol. We've got... of course, gold. I have gotten some emails here on gold. In fact, I've gotten now 3 emails on gold. Another one I see just coming in. Okay, so the question many times, the question is my take on gold changed with the trading at 1266? And the answer is absolutely, positively not. Nice move today. We've seen nice moves in the past here. And I wish this were a Tuesday, not a Thursday. Why do I wish it was a Tuesday? Well, because then when I would take a look at the CFTC COT data tomorrow, I'd know I would know with certainty if, in fact, was the large commercial traders selling into this rally. They've been having a field day. Think of it like this. Let's look at it like this. Let's assume that you were the group referred to as a large commercial trader. And for whatever reasons, you guys had an inside information to believe, because you're never wrong, you're only early to the party. And the only reason you're early is because you're taking such large, gargantuan positions. But yet you are armed with all kinds of dollares out there, right? You've got all kinds of money to start going ahead and taking your short position inside of gold moving lower. Would you not say that this has been a smorgasbord for building that position ever since that little nice blow-off top that we had here on February 11th? I mean, you got to put yourself in that frame of mind. Your orders, your boss is giving you the orders to build large, short positions inside of Goldilocks. Is this not a field day, in fact, to do that? Well, how do we know that that's what they're doing, that they're building those positions? Folks, all we have to do is gleam through the data, go ahead and analyze the data, chart the data. And of course, we can take a look at what the small guys are actually doing, which they are usually, at some point in time, they're always going to get drowned. They are on the wrong side of the boat. Boy, they're on the wrong side of the boat big time right now. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now we got the Dow off 67. S&P is down a buck. Let's go out to Nashville and speak with Lou. Lou, thanks for calling. Thanks for holding. How are you doing this afternoon?
Fine, Steve, and you?
I'm doing very well. Thanks so much for asking. And it looks like you're calling about the S&P 500. Tell me, what you're looking at, how I can help you.
Well, I'm a little confused at this point. I don't know whether to go short or go blind.
Go short or go blind?
Yeah.
Well, the ES Mini is, when I take a look at indices out here, and so we'll take a look at the S&P 500. I would take a look at it. I would take a look at so let's first go take a look at the S&P 500. So as tools, we'll go ahead and use that. Now, in the case of the S&P 500, there's really two things that are impacting it that we know. Light sweet crude is one of those. And that's at the bottom of my screen out here. And at this stage here, this is a daily chart for light sweet crude. I've got the continuous contract up, Lou, just simply so I have more data out here. But the current contract looks the same way out here. There's nothing, and as long as light sweet crude continues moving higher, it has more of an impact inside of the S&P 500. So inside of light sweet crude, you and I do not have any kind of signal whatsoever that it's moved higher has stopped. It could change, in the next moment. But as you and I speak at 1:43 in the afternoon, it's moving higher. No resistance in sight. Inside the S&P 500, it has been moving higher, doing it with less relative strength out there. It made its most recent high back here on April 20th. That's the center portion of my chart out here. Now, when it did that, it also made what I like to take a look at, wave counts here, wave number 6. We've got a reversal signal, but we don't have anything that is truly confirmed. In order for it to really confirmed, we really need a couple of things. One, I think we need to see light sweet crude move to the downside. Or two, we need to see the S&P 500 probably close below. I'll say yesterday's low would be another nice indication out here, Lou, and that's 2082.31. If you get a close below that, then maybe that is giving you the signal as we speak. The third influencing factor out here, is the VIX index. Now, where the VIX index is trading right now, as I look at it, it's given us an indication that the S&P has likely topped out here. But the market that's given you the best message, Lou, is really the NDX 100. And the reason why I say the best message, at least the best odds that a top has formed, is if we take a look at it and we're looking for reversal patterns, what it did was it created the most bearish pattern of all, which is a island top. And let me turn this. Lou, by any chance, are you watching us on Tiger TV or
no,
just?
Unfortunately not.
Okay, so let me describe to you the last time that we saw the NDX really top was on the trading session. It took 4 trading sessions to create the island top, Lou, and that was between December 28th and it was confirmed on December 31st. And then the market continued to precipitate to the downside big time. And people can blame it on China, whatever you want to blame it on. It moved to the downside, with a vengeance. Well, an island top formed out here on April 22nd. And so we now have a confirmed very bearish pattern out here inside the NDX 100. Do we have any other markets that have confirmed a top out here? We really don't. The only other one that we have would be the SOX index, the semiconductor index. That is confirming a top. The Russell maybe, but the S&P has not. Can we have one market moving lower and the others moving higher? Yeah, I think it's taking a bit of time to form this top out here. And, what I would say is your better odds right now are trying to play the NDX 100 on some type of counter trend rally. I will also say, though, if you are really focused on trying to sell the S&P 500, then I would give you this tool and I would say, you watch for the ES Mini today. It's right now traded at 2087.75. You could actually short it right here, but if it closes below 2088.75, then you've got a signal that says, okay, I can go short. But the S&P, the ES Mini is really more in a consolidation zone right now, and it's just not giving. Yeah, it's just not giving me what I would call not as clear of a signal, as the NDX 100. So the better sandbox. And again, I don't know the time frame that you're thinking of trading. I probably should have asked that. Is this you're looking to hold this for a number of days or?
Yeah, probably. I was either thinking of that or SQQQ.
Well, yeah. So that would be the. I would say, right now today, that's your better trade setup. Is going short the Qs out here. That's the way that things look at 147 in the afternoon. And even if the market bounces, the Qs have given us a real nice, so maybe take a half position now. The Qs have given us a real nice set of patterns that say that the market, has turned. But it's been the first one. It's lonely out there, and so you can't go hog heaven to the downside inside the market. At least I don't think you can. And maybe look at some individual stocks as well. So the ES Mini just hasn't given you or I a clear signal yet, but the Qs and the NDX 100, it has. So I hope that helps you.
Yeah, it does, Steve. I appreciate it.
My pleasure. And thanks so much for listening. You bet. Thanks for calling. And, maybe folks, you see something different in the market, maybe something that I'm not seeing. So, so give me a call. That, does it trouble me that the Qs have given us a signal and light sweet crude is head up? Let's go back and look at light sweet crude. And we'll go back to gold. I know we got sidetracked there with the call, but that's cool. In the case of light sweet crude out here, I mentioned A to B equals CD patterns because we're trading at 46.02, so we don't have any market profiles to assist us. We might have intraday market profiles. We don't have daily or weekly out here, and we're looking at a daily chart. And the next A to B equals CD pattern. Let's just take a look at the small one because there's several out here. So the question becomes which one do you look at? Well, here's the most recent one to form. Your A point would be April 5th down at the low. Your B point would be out here on April 13th. Your C point is the retracement into May 18th. Right now, you are at a 1-to-1 A to B equals CD on that. That price projection 46.12. The high so far today, 46.06. So basically, it's there. Is there any end? Does this mean because it's made that small A to B equals CD that it's over? No. You might say 60% of the time it does, but no. There's nothing. There's nothing on the left side of the chart, which is where you and I look. This says that no, price is more likely to get to $48. So does that mean that the market doesn't turn until that happens? Could be. And market might not turn until today is the 28th, and when's May 4th? I don't have my. I'll look it there. I'll look it up on my phone. I don't know when is May 4th. That's a good question out here. So May 4th is on the old calendar. I didn't grab the calendar. Where's the calendar? There we go. So today's the 28th. Oh God. Oh man. This is crazy. I updated my phone and it's got stuff I haven't seen. So May 4th.
Wednesday, Thursday. It could be next Wednesday or Thursday, Lou, if you're still listening, before the market tops out here. So, but the Qs clearly have a problem. Now, back to gold. So what I've said out here and what I've maintained, we were taking a look at. Oh my gosh, where'd that chart go? Well, I'll have to find that chart when we come back from the break. But my promise is we'll go take a look at it. I was putting you in the zone. If your boss had said, I want you to sell gold, I want you to sell the highest levels possible, what would you think of the last 6 or 7 weeks? A smorgasbord, I believe. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, so we're going to go back to gold here. We've got about 4 minutes left. We'll see if I can, can tell you what we're looking at out here. Well, when we take, so again, your boss came to you and said, I want you to sell gold. I want you to start taking short positions. And I want you to be able to sell at the highest prices possible. And you would just simply have said, you could not possibly have done a better job than what you're doing here ever since we had that, what I consider to be the blow off top on February 11th, because you've been able to, every time the price has been bid up by the short-term traders out there. Now, I'm not talking about people who trade on a short term. I'm talking about people that are trying to buy a breakout here. We can see the declining tops line out here, by the way, that is in place. Gold kind of stopped right there. If it gets over it, does that even bother me? No, the answer is no. So here's, we see this, sometimes they call it a consolidation at the highs. And oftentimes we don't have this type of data.
You see a stock consolidating at highs, and we don't necessarily know what traders are doing. But voila, we do know what has been going on inside of the gold market. We know what's been going on inside the silver market. We know that, at least as last Tuesday, the last time that we had any significant move inside of gold, we know that it was those guys that were tasked with selling into the rally that were in fact doing that. The bottom panel of the chart is what commercial traders were doing, the big money, presumed to be the smart money. And you can see that they moved to a higher net short position as of last Tuesday. That's why I say I wish that today was a Tuesday, because we'd have another piece of information out here. I won't assume anything. I'll take a look at the data and reassess it over the weekend out here. But the reality is that they have been, the highest high hasn't been taken out. That was the high from back here. This is the week that that ended March 14th out here. And they are just simply piling up. While at the same time, the short the small traders. So I won't get short term, because then we'll get it confused with regard to time frames out here. But the non-reportable group of traders, they actually got to net long positions out here. That's the individuals. That's like you and me. That's other people out there that are saying, I'm going to go ahead and buy into this rally here in gold. It's just going to keep on moving higher out here. Well, you can see you've got a lot of friends out there that are, in my opinion, are going to get sunk. Are going to get sunk good out here. So, but if you use stops, it doesn't really matter. As long as you use stops and you go ahead and honor those stops, and it doesn't matter what I think or anybody else thinks or what you think. You have protection in there, and that's really what it's all about when you trade. So the message is clear with regard to what the big money and small money traders, in essence, are doing out there. If you want to trade gold intraday, there's and then the question, is always posed, hey, what's going on with regard to like the GDX and things of that sort? I don't know. Let's go take a look at it. GDX out here. Here's the gold miners ETF. Hey, it's taken out the highs from the prior highs from April 21st out there. I want to be clear on this. I've tried to be clear, but I want to make sure that I'm absolutely clear. When I'm talking about gold and silver moving to the downside in a big way, I don't know what the miners are going to do. It does not work where they move tick for tick. So there's been some nice moves out there in individual stocks. Those are the ones that you'd want to be looking to get back into, on a light volume pullback. Do they always go in concert with each other in correlation, directional correlation? And the answer is no. You have two totally different patterns out there. So when I'm speaking of the physical gold market and the physical silver market, you've got the exact same pattern inside of silver out here. I'm really speaking about those individual markets. And by the way, commercial traders last week got to the highest high in shorting silver that they have been at for years. And that's how convinced they are that the next major move is going to be to the downside. Maybe they're wrong. I wouldn't want to be betting against them. I certainly wouldn't want to bet against them if I didn't have a stop in place. So, folks, stay tuned. David White's going to be up next. I won't be here tomorrow. I'll be traveling. But have a great Friday, a great weekend, and I'll see you on Marvelous and Magnificent Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.